The main goal for every trader who comes into the market is to be consistently profitable. And in order to be consistently profitable, you have to win more trades than you lose, which makes you a winner. And ladies and gentlemen, one thing about winners is you have to keep winning, which means that winning is not about winning itself. It is about performing day in and day out. And as a trader, the psychological aspect of trading is what is going to stand in your way from whether you consistently lose or whether you consistently win. Because as a trader, you can learn the technical skills, but the psychological skills and the skills of being a performing winner is one that can take a little bit more to develop. And ladies and gentlemen, in this video, I am going to be walking you through some of the steps that are going to allow you to dial in on your trading performance, your trading psychology, so you can trade more objectively, less emotional, and just get the results that you are seeking as a trader. Let's waste no time. Let's dive right into it. So we're taking a dive into the step-by-step guide to mastering your trading performance. Now, ladies and gentlemen, a lot of people may not be interested in the psychological aspect of trading or trying to improve your performance, from a psychological standpoint, because you're focused on the technical aspect. But without this, the technical aspect will be irrelevant. And here at Livefree Effects, our slogan is where the mind meets the market. So in order for you to be the best possible trader, you need to understand that you're coming into this game and this is a performance-based craft, right? You are working towards being a winner. And the one thing about a winner is you have to keep winning. You are not a winner if you can't keep winning. And in order for you to keep winning, you need to be able to keep performing at the optimal level. And this is going to allow you to do that. When I came into the market years ago, I struggled with the psychological aspect. I struggled with the technical aspect. But once I gained the technical skills, the psychological skills was very, very difficult for me to wrap my head around because there was not a lot of information out there. So I worked with a psychologist and essentially got to a point where now I'm essentially making the money that I want, doing the things that I want, controlling my time. And if that's something that you want to do, definitely this is for you. So we're going to be going over the step-by-step guide, right? And make sure you watch it to the very end because all of it here is juice you're not going to get anywhere else. Let's get right into it. Going over here, I love this quote. A successful trader understands that the only thing they can control is themselves. And this is so important to understand as a trader. And it is a great mental mind frame. It is a great mindset to maintain because when you come to the market, we deal in probabilities and we cannot control whether we win or we lose, whether price goes up or goes down. We can anticipate certain things, but we can't control when we execute whether the market is going to move in our favor. So when you understand this, and not just understand it, you actually accept it. It takes a lot of the stress away from you trying to control the market, you feeling frustrated, you feeling targeted, you feeling victimized by the market, right? And understand that the only thing you can control is you, the mind that you bring to trading, right? How are you coming into the market? How are you interacting? How are you starting your trading day? And all these things are things that we're going to be covering here on the charts here. So let's go over to our next slide. The very first thing when it comes to mastering your psychology and your trading performance is establishing a trade plan. Now, this is a very common mistake that I see a lot of new traders make when they come into the market, and sometimes even seasoned traders. I'm talking to seasoned traders for 2 years, 3 years, and you're telling me you ain't got a trade plan. It's like going up to an investor, you starting a business, going to an investor saying, hey, I need capital for my business. And the investor says, okay, cool. What's your business, right? Share your business model. And you're, I don't exactly have I don't have the details for the business, right? This is what I'm doing, blah, blah, blah. And they're not going to give you money. You need to have at least some sort of plan. And if you're coming into the market with just your capital and you're winging it every single day, trying to see what hits, you're going to be on the losing side. So if you are going to get to a point where you are seeing the profits that you want to see, take some time, watch this slide and take some time and go over your trade plan. Create a trade plan for yourself. Your trade plan is essential to successful trading as it is the reference point you create based on your own skills, where you currently are, and your goals. Develop a trading strategy that takes into consideration your trading goals. This is something that I highly recommend. That should be the start. It takes account your trading goals, right? And your intentions, because when you're coming into the market, right, your why is important. And your trading goals is essentially going to act as the why. Why are you doing it, right? Are you doing this so you can quit your job, so you can work for yourself, so you can travel the world, so you can make consistent profits, do it for a living, change your career, right? Whatever it is, because that is going to push you in days when you are not feeling motivated. Your trading strategy should also have your risk tolerance, market analysis techniques, whatever you're doing to break down the charts, entry and exit criteria, trading schedule, your trading time. What time are you coming into the market, right? Because every business have business hours, and this is the process of treating trading like a business. The pairs that you're going to trade, and how much time are you going to commit to trading, to backtesting, collecting samples, your education overall. How much time are you going to be able to invest? These are all things that you should have in your trade plan. Continuously update your trade plan as you evolve as a trader. So don't be afraid to create a trade plan now, and it could be like not the greatest. It's okay. But as you start to improve as a trader, you're going to be able to create more and better strategies, because you're going to know more of, what you want and what you don't want. So this is the very first step. The next thing is to establish your psychology plan. Cultivate a mindset focused on resilience and adaptability, acknowledging that losses are a part of your trading journey. Now, this is really important. If you are going to create a trading plan, you should also create a psychology plan. And a psychology plan will cover a wide variety of different things, but it'll cover your history, your tendency with handling emotions or stressful scenarios. These are things that you want to think about. How do you deal with stress, right? How are you in the morning, and putting things in place like breathing, mindfulness techniques like meditation. These are all things that can help improve your overall trading. So for me personally, one of the things that I like to do is I don't just like to roll out of bed and jump into my trading. I like to wake up an hour or 2 hours before my trading session starts, meditate, do some reading, calm myself down, and just maybe sometimes even journal and get my mindset in the right frame. I also like to visualize. So this is something that I would recommend even putting in your psychology plan as well, right? And it's just a process that you can follow day in and day out that will allow you to effectively come into the market in the best mental space. And a part of the psychology plan that I would also recommend is exercise and taking care of yourself, making sure that you're prioritizing self-care, because you are the edge in the market. If you can take care of yourself, there is absolutely, nothing that you can do. Someone who feels good will make good decisions, and a lot of the time just, be better. I would recommend that. Have a supportive network, be a part of a community, or, someone that you're constantly talking to about, if you're dealing with a lot of stress, whether it's a fellow trader of yours or a trading psychologist, right? You can have that. If you're a part of the Livefree FX community, we have a pretty strong network there, supportive members, and, myself as well. So that's also a place that you can, get in on, and just overall get a feel of like, okay, how we're dealing with the psychological aspect. So that's really important as well. The next thing is to create a trading journal. Like any journal, a trading journal allows you to record your trades so you can track your progress and learn from both the winning trades and the losing trades, right? The trades that are successful and the trades that are not successful. This is the number one thing that will determine a winner from a loser: your ability to analyze your performance. If you are not looking at your performance over a span of weeks, months, maybe even years, you're not going to improve, because you can engage the market and take trades, but what is going to allow you to come back 1% better, which is always the one thing I always say, every week you should be coming back into the market just slightly 1% better, or maybe 0.01% better, or whatever, right? But try to get better, and the best way to do that is by analyzing the trade, analyzing your week's performance, and saying, okay, this is what I need to do in order to improve my overall trading. Your trading journal should include your entry, your exit points, your trade rationale, why you got into the trade, right? Your lot size, your risk management parameters, outcomes, learning from that trade. Winners analyze why they won, right? And why they lost, right? Losers try to forget about it. So always remember that when you lose a trade, I know the emotions are high, and a lot of the time you just don't want to think about the market. You just want to go lay down, sleep it off, whatever the case. I've been there. But it is important that you take the time, especially when the emotions are high, maybe, a couple hours later, and you say, hey, you know what happened? Why did I lose this trade? And what you're going to start to realize is, as you start to analyze those losses, you're going to start to see them as a stepping stone to success. They're going to take you from where you are to where you want to be. So your trading journal is it's really, really, really critical if you are going to improve your overall trading performance and your psychology as well. So a suggestion is to keep it simple. Take screenshots or third-party software. Okay, preparing for your trading day. Now, this is where we start to get into the performance aspect of the trading day, right? You're coming into the market. What are some of the things that you're doing, right? And we're gonna walk through the step-by-step. The person you bring to your trading desk will highly impact your trade outcome, right? This is important. Make sure you're getting enough sleep the night before. Don't rush to your trading desk, which is what I said earlier. Make sure that you're coming into the market and you're relaxed, right? You're not just rolling out of bed and jumping into the market. You need to mentally prime yourself for success. And this is just, if you watch any high performing athlete, any whether it's a F1, LeBron James or something, right? They have a mental process that they engage in before they go into the field. And you as a trader have to do the same. Meditate and journal in the morning to prepare your mind, fuel your body. Not every day is a trading day. Know when to step away. But if you don't create that awareness before you start your trading day, the last part, you're not gonna know. Because if you just roll out of bed and you jump into the trading chart, you might discover, you know what, you weren't feeling that great today, but it'll be too late. So when you wake up and you spend 30 minutes, priming yourself, you can get a feel, okay, you know what, I'm not feeling it today. And there are times where I come into the market, maybe I've been out with some friends, maybe I was out drinking, maybe I stayed up late and I'm not getting enough sleep, and I wake up and I'm a little too tired to make decisions. I just go back, to doing whatever I was doing and just not trade, right? Not trade for the day, call the day, and just maybe do something else, for the morning. Watching for trade setups. Now, when it comes to your performance and your psychology, there are steps that you have to keep in mind. And each step of you coming to the market, when you are analyzing, right, before you execute your trade, you're going to go through different steps, and each step can create a lot of psychological aspects if you're not aware of it, right? And you need to be focused on certain things in order to consistently perform at the highest level. Number one is to focus on breathing to keep calm. It is really important that you come into the market and you are relaxed, right? And breathing, breath work is one of those things that will do that for you. Keep your heart rate low so you can think clearly. This is a phase where you are watching for the market, you're set up to come into play, right? Be patient and wait for price to present you with an opportunity. Stick to your trade plan. If price doesn't present anything, don't act or adjust the rules of your plan. A suggestion is to wear a heart rate monitor, which is a biofeedback device. And this is where I usually go into talking about how you as a trader can, stop your amygdala. Your amygdala is part of your limbic system, right? It is in charge of processing fear or threat. And when you are putting your capital at risk, your amygdala will get triggered, and it can drive you into, fight or flight mode. And breath work is something that will allow you to do that. But the first sign is you will get your heart rate increased. You will notice that your heart rate is beating faster and faster and faster. And sometimes you may even experience that while you're waiting for the market, right? While you're waiting for a price to set up, because you're like, oh my God. So wearing a heart rate monitor kind of gives you the advantage, because it lets you know when you're getting to a point where you need to focus on your breathing, where you need to really remain calm. So that's one of the things I would highly recommend during this phase. Going over here, trade warm up. When the market is moving, towards meeting your entry criteria. As a trade shows promise, continue to focus on your breathing, as this is a natural time in which your body will start to physically respond to the threat of losing money, because you're about to put your capital at risk. You are about to pull the trigger. And for me, when I come into the market, when I'm doing my live trading session, I'm like, okay, I'm waiting for the right opportunity. But I also know, man, what if this trade doesn't work out? What if I lose this trade? This is where you want to focus on just maintaining your composure. I always talk about that during the live trading session which you watch. Staying calm, staying relaxed, and not, being overly worried or overly excited about, just whether you win or you lose. But your brain is going to think that, and you have to focus on just being calm, being relaxed. You can set pending orders or wait for market execution. Maintain neutral emotion. Try not to get excited or afraid, right? Stay stoic. Practice being disciplined, patient, and calm. The number one thing I recommend with this is to keep good risk management, because if you're coming into the market and you know that the trade you're about to take is 50% of your account, there is nothing I can tell you psychologically that will help you stay calm. It's impossible, because you're about to put in, you're going all in the casino. So if that's your approach, then you can ignore whatever I just said. Nothing can help you, mate. It's important that you're keeping good risk management. You're taking trades that you can afford to lose, because one of the things we said in the beginning is we do not control outcome, right? We cannot control the market. We can control ourselves and the decisions that we make in the market. So if you're risking, 1%, 2% of your trade, that's good, or you're keeping specific lot size, but making sure the trades that you take, you're okay, if it doesn't go in your favor. Losses are terrible. It sucks for everyone, myself included, but it is part of trading, right? And we're gonna so keeping good risk management is extremely, extremely critical. Trade entry, this is where, you are waiting for your setup, right? And your setup has come into play, and now you're just, boom, right? You want to stay calm, right? You want to stay calm. You want to execute. You want to focus on the process as you get here. Once the trade has completed your trading checklist, execute the order with a calm mind. The rest is up to the system and the probability. This is one thing I always tell my traders, like, listen, especially traders in the community, students that I'm working with one-on-one, like, hey, you collect samples. When you backtest your system, you can see the probability. What is the point in backtesting your system, right? If you are going to be afraid to execute it when it shows, a setup, right? So when it comes to, the trade entry, this is where you are taking your trade and you are just focused on the execution process. This is the only part that you can control up until this moment. Everything else is out of your control, right? You can't control anything else up until this moment. So it's really important that you keep this in mind and you focus on just, sticking to your plan and focus on the process and just focus on the execution. If you get the execution right, the rest will take care of itself. Money will come as a byproduct. Now, this is the next thing. You take a trade and it goes in the red. It's a reality that trades will end up in the red, so it's essential to focus on executing your trade rather than fixating on losing capital. When you take a trade, it may not go in your favor, right? When you watch my live stream videos, sometimes you see the trades literally about to hit my stop loss, right? It's a part of trading. You may take a trade and it may not go in your favor right away. During this phase, it is very difficult, right? And during this phase is where you want to focus on maintaining your calm, breathing, really focusing on just staying relaxed and understanding that your system is going to take care of itself. And even if you lose the trade, right, you can still get back into the market, or maybe it depends whether that's your second loss or your third loss for the day. You can still follow your plan. That's the most important thing. Follow your plan and you stay focused on the entire process. We all lose, right? But during this phase, you want to focus on the execution. You cannot control whether you win or you lose. So just stay calm, stay relaxed, and don't trip. Now, taking a loss. This is the big part. This is the worst part, right? What you do after taking a loss is critical. A lot of traders become impulsive, right? Because when you take a losing trade, it feels like a threat to your survival. And that's where your amygdala gets kicked in and it goes into fight or flight, which drives traders into acting, emotionally. And a lot of the time they don't know why they did that, or they just blank out. So the number one thing you got to do is to stop trading, at least until you can recenter yourself. Focus on breathing and remaining calm. Don't yell or scream at yourself. This is a very common mistake I see a lot of traders make. They call themselves names, and I did this to myself until I realized it was creating more of an internal dialogue that was fostering the same negative behavior. So simply close the chart up, walk away, and wait for the next trading day. The number one saying that I love after a losing day is the sun will shine again. Always keep that in mind. Remember that. Record your losing trade in your trading journal so you can learn from it. Was it a method mistake, right? Was it a psychological mistake, or was you on the wrong side of probability? Because sometimes you can take a losing trade and it can simply just be because, it wasn't your fault, right? So a lot of the time trade just doesn't work out because the market wasn't giving you what was possible. So sometimes it could be a psychological mistake, but if you executed your trade as perfectly as you could and price didn't go in your favor, that is a win, right? You should still come to the market and focus on doing the exact same thing. Don't change it. A lot of traders will experience a loss or a losing streak, execute it perfectly, their strategy perfectly, but because they're experiencing maybe a loss or multiple loss, they start to try to do something different, or maybe try to trade with a different strategy or a different concept. You don't want to do that. Give the market consistency and it will give you consistency in return. Suggestion: as part of your trade plan, set a maximum number of losses you are willing to take in one day. Stop trading when you hit this number. My number is 3. After 3 losses, I usually just walk away for the day. I know it is not my day. Generally, 2 losses will give me that sort of insight, because if I take 2 losses back to back, it's usually like not my day. But this is something I learned just from journaling my trades and noticing that days when I lose 3 trades in a row or 2 trades in a row, it's not it. But when you set a maximum number of trades, it acts as a cutoff time. Hey, this is it. You're done. You're done, right? Just go, and it's not your day. Come back tomorrow. So that's one of the things I would recommend here. Now, winning trades: as the trade moves in your favor, lean on your psychology and your trade plan. Stay calm, breathe. Monitor your heart rate. Focus on your exit strategy. Where you're getting out. I always recommend to pay yourself, right? Take something off the table, but that should be part of your exit strategy as well. There's nothing more disappointing than overlooking your exit strategy and ultimately losing the trade in profit. A lot of beginner traders can be successful in a shorter period of time if they learn this part of the process, your exit strategy, because the market gives you money. The market gives and the market takes. When the market gives, make sure you take. If you want to learn more about how to refine your exit strategy, this is something that I do in the live trading session, right? This is in the live trading videos. You see that with my 30 pep rule. If you want to learn more about it, you can join the community. And there are plenty of videos even on the channel as well that will walk you through, that rule. After winning the trade, don't celebrate, at least not right away. I am all game for, going out and partying and your off time. But while you are trading, stay calm, stay relaxed, right? It's not about, oh my God, I just won, and you're feeling like top dog, right? You're feeling like you're on top of the world, because when you start to celebrate and you start to really drink your own Kool-Aid, you could easily get into a mental space where you are just trading from an overconfident standpoint. And generally, after some winning trades or a nice winning streak, you usually experience your worst losing streak. Do your best to detach, in terms of suggestion, from the good feelings that come with winning, and still celebrate your wins. I'm a big believer of that. Applaud yourself for the good work and executing your plan, but just keep executing your plan. Stay focused on that. And that's the video, guys. Thanks for watching. Hope you found this video insightful. I wanted to share the psychological components that you need to focus on as a trader in order for you to increase your performance. I feel like this is something that is not talked about enough. You know, a lot of us spend a lot of time trying to understand the technical aspects of trading, but we're not really thinking about the process. And here at Livefree FX, we are big on the process, right? If you focus on the process, money will come as a byproduct. So hopefully this video is an insightful one, because it goes into the details of just what it takes to really be a winner, what it takes to be a consistently profitable trader, and the steps that you can follow from regulating yourself, from creating a trade plan, and all the other great stuff that you can do to give yourself an advantage. It is important to note that you are the edge in the market. It is not you versus me versus player B versus the broker. It is you versus you. The market is a reflection of you. It is a mirror. And the better you can control yourself, the better you can focus on being the best version of yourself, the better the results you will get. And that's the video, guys. And also be sure to follow me on socials, on Instagram, links down below. You can leave a comment down in the description in terms of what you learned from this video, if it made an impact in your overall trading experience. As always, it's Emmanuel from Livefree FX. Hope you're out there living free. Peace.